Hello there, I'm Jason Butler, and in less than 5 minutes I'll explain all you need to know about human insurance but we're too embarrassed or shy to ask. Now, if you rely on your ability to earn money to fund your lifestyle and build wealth for the future, the financial impact on you or your family could be devastating for you if you became ill for a prolonged period, or worse still, you died. Human insurance allows you to offload that risk to an insurance company in return for a small monthly fee. It's a bit like your mobile phone subscription, but you hope you'll never ever need to use it. This is what we call Money Milestone 6. State benefits are meagre when it comes to illness, disability or death, and for most of us they just won't be enough. Let's talk about illness or disability. Income protection insurance pays you a proportion of your monthly income from work if an illness or disability means that you can't work for a certain period of time, known as the deferred period. That deferred period can be anything from 1 to 12 months, with 3 months deferred being the most typical. The insurance company will continue to pay you the monthly benefit until you get better or your chosen retirement age, which is typically age 65. And you can also choose to have the benefits protected against inflation every year so it keeps its value. Many big employers provide this type of cover automatically, but it might not be enough for your needs. And most small employers and self-employed people don't have any cover, so they need to arrange their own policy. Employer-provided income protection is taxable like normal salary, but a personal policy pays the benefit tax-free. Sufficient income protection insurance should be your #1 priority, because you have a much higher chance of becoming long-term sick or disabled than dying before the age of 65. And the cost is usually less than a typical mobile phone contract, and it's easier to get cover when you're under 40, so don't put it off. Now let's talk about death. No one wants to think about dying, but the fact of the matter is that people die of accidents, illnesses and diseases all the time. Admittedly, it is a low probability event, but if it happens to you or your partner, the impact can be massive on the surviving partner and any financial dependents. It's a tragedy to lose one parent through death, but a calamity to lose the other one to years of working long hours just to make ends meet. Life assurance pays out either a lump sum or regular instalments for a given term in the event that you die. Lump sum cover is good for repaying debts like a mortgage and to meet other immediate needs. An instalment plan, known as a family income benefit policy, is best to meet longer term living costs without the hassle and worry of having to invest the money. Most life assurance also pays out the benefit if you have less than 12 months to live, and this is known as terminal illness benefit. And to ensure that your family gets the benefits quickly and free of inheritance tax, you should place the policy in a simple, flexible trust, which the insurance company can usually help with. The cost of life assurance is really cheap. It'll probably be cheaper than your combined music and video streaming monthly subscriptions. The final type of human insurance is critical illness protection. Now, this pays a lump sum benefit if you're diagnosed with any one of a range of very serious medical conditions like heart attack, stroke or cancer. But it's really expensive, and the chances of making a valid claim is a lot less than the likelihood of being able to claim under an income protection insurance policy, which we discussed earlier. For this reason, I don't think most people should worry about getting critical illness cover. Instead, they need to focus on having enough income protection insurance. The only exception is people who are key to their business and where business borrowing might be called in or profits might be undermined. In that case, the business can buy the cover. So there you have it, Money Milestone 6. Put in place the right type and amount of human insurance to avoid you and your family being blown off course if the worst was to happen. Income protection first if your job doesn't provide it, life assurance for your family, lump sum for loans and instalment type for living costs, and critical illness cover if you're a key person in a business. Visit my friends at Cura Money via the link below if you need help and advice in arranging a policy, because they're the only human insurance advisors that I endorse. Remember, if you insure for what can go wrong, you can then invest for what can go right. And that's the subject of another video. See you next time.